Well, good morning, and it's all about the Fed. As you can see, I've been busy reading up almost as much as I can in just to try in order to make sense of what could happen on the Fed front, right? Because really, until then, I doubt that the markets are going to do too much. So, if you just look at yesterday's move as well in the U.S. markets, you would see that while the Nasdaq ended marginally in the green, the Dow and the S&P were flattish, but the Nasdaq was up at a point of time led by Apple, and then just kind of flattened out completely. And that's what I believe would, and our markets too were flat, by the way. And that's what I believe would be the scene for the rest of the day today for most markets, because I doubt that too many long or short positions would be built ahead of that big event. This is what the US market did. And you can see absolutely flattened out towards the end of trade. So hardly any move there on the benchmark per se. And also the market expectations ahead of the policy. So if you can see the Fed fund futures rate, and I highlighted this chart, I think yesterday or day before as well, they are pricing in some bit of earlier moves as well. So the market in its wisdom is already pricing in some bit of earlier tightening. And therefore, can Jerome Powell in his press conference assuage investors? Because frankly, if you were a US investor today, for example, the dot plot release would bring about a lot of moves in the US markets today. And you have to keep that in mind. And then Jerome Powell's press conference would have some other impact. So thankfully, we will only open after all of this drama is done. And therefore, we'll only react to this piece of news. So yeah, it's the trade setup, right? I mean, yeah, let's stick to that, and then we'll bring up Asia and SGX Nifty. Doesn't matter. Let's first figure out the trade setup. Markets are very unlikely to stage very strong moves ahead of the very crucial Fed meet. I would reckon that the tech and the IPO tech shares, technology had a really strong move yesterday, and I reckon that Indian tech is poised for that simply because they are pricing in a very strong Q4, and the only dependable Q4 which will not have an impact on commodity price rises, etc., etc. And therefore, I would presume that tech and the IPO peers, remember the IPOs which are coming at such expensive valuations, and I mean, it was mind-boggling for me to see Anupam Rasayan IPO response. I can understand Lakshmi Organic, it still has a reasonable valuation. Anupam Rasayan, as good as the company is, and you can read more about it on our website, but priced at 95 times, you would expect that the response would be a bit muted, but that just shows the frenzy in the retail investor currently. And because of that, you might actually see some of the currently listed peers, which are not so expensive, also get a bit of a trading leg up. So just a trading leg up, that's the point I'm trying to make. So let's wait and watch if that happens. Of course, FIs kind of bought in the session yesterday. Some of it could also be on account of block deals, and that may well happen today as well. But it was an interesting move on the F&O side. Now, let's just tell you what SGX Nifty is indicating today. Remember the Asian screen when I saw it last was a mixed bag with some indices floating above, some indices floating below. The SGX Nifty is indicating a start which is about 20-25 points up in the green. It could well be in the red, frankly, it wouldn't matter. So really, that's how we are poised to start off in the session today. And therefore, the question is, should we look at more stock-specific moves? And I think all of us should, because that is really what will matter today. I really think that the whole market per se, will largely be flattish in the session. Banks could be under a little bit of pressure, but that's okay. I mean, it could bounce back as well equally quickly. I think the larger portion of the move will happen tomorrow. So what about specific stocks? 4 or 5, aside of SBI cards, which I'm not presenting here, but there is a block deal at about a 4% discount, and therefore the stock could start off lower, but might get quickly bought into. There are a lot of other stocks that all of us need to watch out for. So Vedanta will clearly be a mover. I'm laying it out. Vedanta Resources has raised the open offer price for the buyback to about 235 per share. It's not only the price, the size as well has been raised. I mean, the offer size is 651 million because it represents about 17.5% stake in the company versus the earlier about 10%. So clearly, one, it shows how keen, stroke, desperate the promoter is to take Vedanta under its fold. 2, it probably also indicates that the promoter now has more money because the commodity cycle is done so well. It could be a combination of both, but Vedanta is doing really well. Now imagine, viewers, the base price was 87 rupees per share. At that point of time, Vedanta, the stock, was 90 rupees per share. It's traversed a long journey, currently at about 225, but more importantly, it will react positively today. I mean, I'll be really surprised if it doesn't react positively today. Can it go up even further? Maybe it could, but let's wait and watch. Um, the one which will start off lower today and a flash trade on the downside is most certainly possible. Keep an eye out on the pre-open rates as well. Is BPCL? They've declared a dividend of 5 rupees per share. Now, why is this important? And everybody knows this, but I'll still lay it out. Forget 60 rupees per share. We've been saying this for the last 2 days that 60 is out of the way. But 26 was a realistic expectation. You're going to try and talk to the management about why is it that the dividend is only 5 rupees per share. Do they want to retire some bit of debt with this treasury money and Numaligarh will be used for something else? Well, don't quite know. But 5 rupees per share is a disappointment compared to market expectation, and therefore I believe that the stock could have a bit of a reaction downward. The point is, should you use that as a buying opportunity? Now, I'm no one to comment on whether it's a buy or a sell, but I'm laying out a Credit Suisse view out here. This is a report dated 16th March, which is yesterday. They have said that they are upgrading the stock to outperform from neutral rating. They have lifted the target price to 585 from 375 rupees earlier. They are saying their thesis is that the steady state EBITDA for BPCL could be 2 to 2.5 billion dollars, wherein FY20 was about 1.7 billion dollars. Now that's a telling shift on an EBITDA front. Remember, this is not revenue front. On an EBITDA front, if EBITDA moves from 1.7 billion dollars to 2.5 billion dollars, steady state, that's a big figure. They believe the higher end of the range is possible when a potential acquirer, whoever the acquirer would be, is able to reduce refining costs, increase productivity, and increase non-fuel revenue. All three, which people would believe would be normal in the case of BPCL getting privatized. But the point is, and they're saying, of course, that the stock is upside even beyond divestment of the government stake. And that's the point that I'm trying to make. Everybody is now starting to view BPCL as a post-divestment candidate. Now, unless the divestment hits a roadblock, and then all these thesis goes away, really. But if that is not the case, and the government's intent of late with Numaligarh, with Treasury stake, with the other acquisitions, all seem to suggest that the divestment is on track. You would want to believe that people are starting to look at BPCL as a post-divestment candidate, and maybe you as a retail investor should look at it that way. So a lot of dealers say that dips and large dips, if they come today, should be buying opportunities. I doubt there will be a 40 rupee dip. Really, a lot of people in the market are saying that, oh, 35-40 रुपए नीचे खुलेगा. It could well do, by the way. I mean, the markets are smarter than you or me or anybody else, but I doubt that that will happen. However, watch out for BPCL. Could be an interesting one. Watch out for Dhani. The last few days, the stock has had a interesting move. Now, yesterday, the big one, Samir Gehlot, has bought about 27 lakh shares at about 266 per share. So, no surprise that Dhani was so active. If it is active today as well, you should know why. This is interesting. This is very, very interesting. Smart promoter getting in. Let's wait and watch what happens. The other one is Nazara Tech in the IPO updates. This one opens today. So now you'll be spoiled for choice because there'll be three open, right? Anupam Rasayan closed yesterday, but Lakshmi Organic is still open. Kalyan Jewellers open yesterday, and then Nazara opens for subscription today. Now, optically, if you look at the numbers and the P ratios, I mean, not P because it was a loss-making company of minor profits, it will all look very, very expensive. I'm bringing out an angel broking quote out here. They say that at the current levels, the stock is trading at EV to sales of 11 times. They are viewing it as EV to sales. FY20 revenues. And by the way, FY21, our first half, they've done much better. Angel recommends a subscribe rating to the IPO given the strong growth potential for the company, considering the vast potential offered by the gaming industry. That is the point, viewers. I think yesterday I was looking at the list of the anchor allottees. Amongst the most marquee names I've invested in this. And I think the belief is it's a leap of faith that it's a gaming stock. There's no other gaming stock in the country. And gaming is an industry that will come of age in this decade in 2021 to 30. And therefore, Nazara is a stock to buy. Now, keep in mind, for a lot of investors, this is a small pool of their portfolio. And therefore, you may look at an investment of X million dollars. It's a very small fraction of what their overall portfolio size is. So if you're buying into Nazara in the IPO, make sure that it's a small portion of your overall size and not a very large portion, because these things are volatile. And you should be able to ride the volatility in the choppiness over a period of 3, 4, 5 years in order to make money. I'm not saying it will not make money. It could make you money on listing day itself, for sure. But if you're a long-term investor and a serious investor, try and allocate that portion of your portfolio which you don't mind seeing some volatility in. So that's the long and short of Nazara Technologies. You can read more about it on our website. I've done an interview with the management as well. So hear the IPO or the conversation or read the story. All you need to know about Nazara since it opens today. So that's the other one that should be firmly in focus. No peers, so I don't think any listed stock will react. But all in all, in today's trade, BPCL in focus, SBI cards in focus because of the Carlyle block. So two stocks which at 9:15 will be very, very active in addition to Vedanta, of course, which will be very active. And then a bunch of others, some brokerage notes, all of which you can follow the Twitter updates of BloombergQuint as well. So thanks so much for tuning in today. Have a profitable day. Remember, the index in most measures will not really have too many gyrations ahead of the Fed meet announcement today. We'll be back tomorrow on the trade setup to tell you all about what the Fed meet implications are for Indian markets. And of course, the talking point conversations will try and cover most of these points as well. Thanks so much for tuning into the trade setup.